We want to welcome you guys,
Thank
Julie and
you.
Daniela from
Thank
Secure
you.
Choice Lending.
Thanks.
We
It's a
are
pleasure.
on episode 5. We have Jason
Yes,
as
episode
usual.
5.
Yeah,
All right.
so we're here and we just want to talk about the market a little bit. So, in terms of the market, what are you guys seeing? What's the activity? What's kind of the lowdown from your
Well, we're
end?
seeing I mean, what
Lots
you
of
guys are
activity,
probably the same thing that
right.
you guys are seeing, right? Like a million offers on homes,
Yes.
right?
Yeah.
Hesitation from people sometimes because of interest rates. Everyone's like, "Oh, rates are so high, rates are so high." A lot of hesitation there. So we're kind of trying to tell them that it's irrelevant, right? Your rate is temporary. It doesn't matter.
Yeah, as long as you can afford that monthly rate.
Exactly.
Yeah.
Exactly. It's kind of like when people wanted to remember like a few years ago when everyone they wanted to wait, right? Because prices were so high.
Right.
And look, prices are still high.
Yeah.
Now,
So and now rates are high. And I remember doing a scenario basically saying, hey, even if prices were to drop $100,000, but your rate was 5 or 6%, which nobody thought was going to happen because that seems so high from 2.5, right?
Right.
This is going to be your payment. You're still going to pay a cheaper payment, but people don't really want to hear that.
Right.
They don't comprehend that, right? So now rates are a little bit higher. People are hesitant to buy, but I feel like they should just buy.
Yeah.
Because the rate is temporary. Everybody refi. Somebody said to us, what did they
Yeah.
say to us yesterday? What did the lady say to me?
Oh,
when I
yeah.
was sitting there.
Well, when am I going to be able to refi? And what does that process look like?
Yeah, exactly. Yeah.
Yeah.
I mean, we wanted to go over that a little bit.
Yeah.
So what does that? Because I get that question all the time. We say, hey, we can get the house. That's the hard part. And then when the interest rate's lower, we can refi at that time. So
Yeah.
like, what does that look like? How much does it cost? How long do they have to wait?
Yeah. So to answer your question, they need to wait about 6 months. They have to make 6 monthly payments. And the cost is, there's so many different.
It's probably
Yeah.
about, I mean, normally a refinance is about $2,000,
Okay.
right? That of,
Oh, okay.
of fees, right? There's their new impound account set up, but that and everything is rolled in. There's
Okay.
nothing out of pocket. So that's a misconception too, is people think that they have to come up with this money. They don't need to come up with any money.
Oh, that's good to know.
They can skip 2 payments actually, and they don't even essentially have to have equity. So if
Oh.
you're refinancing an FHA or a VA loan, you don't need any equity. It's a streamline, right? So
Yes.
the lady said to me, "What if I can never refi? What if rates never go down? I mean, what if I have
And
no equity?
that's
What if the
fine.
market
Yeah,
crashes?
yeah,
Oh my
yeah.
God."
Yeah, these are great
So
questions. Yeah.
I'm like,
Yeah, good
no, it's
questions.
gonna be fine. It'll be fine because you can streamline it. We're not gonna do an appraisal. We're not gonna do anything. We're just gonna give you the lower rate as long as you've been making your house payment. That's what it's gonna be based on.
Okay. Oh,
Is
nice.
so it's a streamlined refinance on all FHA and VA loans, which is probably what everybody's gonna do in 6 months to a year, right?
Okay.
Yes.
What about credit qualifications? Does that
I mean, it's still FHA VA, so I mean, 620,
very
580.
Oh, okay.
Very
So they
It's
just got to keep it.
Yeah, they
what
should keep it where it's at. They don't want it to go lower. 'Cause then,
Don't be late.
Yeah.
I mean,
You
don't
want
have
it
a
to go
mortgage
lower.
late because you're not
Yeah.
refinancing.
Yeah,
then.
yeah.
Yeah.
Does DTI come into effect? Do
On the
refi-
streamline, no, because I mean it does, but we're not verifying any income.
Right.
Right,
So
we're not-
it's just a credit report.
Yeah,
right?
it's just a
Oh,
credit
okay.
report.
There's
There's
no
no
income.
appraisal. We're going to verify that you have a job. So as
Yeah.
long as you work at the same job, we're just going to use the income from your old app.
Yeah.
Okay. Oh,
That's
well.
the easy process.
Right. Okay. What about conventional?
Conventional is going to be a full, I mean, the cost is around the same, right? You have your loan fee and then you have escrow and title, and then the impounds, you can either roll those in, pay those. I mean, there's a bunch of different ways, but you don't have to come in with any money, right?
Got it.
But the cost is about the same, but you do have to fully qualify
Okay.
Yes.
Okay.
for the loan again.
Okay.
Yeah.
Got it.
And you do need to have the equity. I mean, at least your 5% that you went in with, you do have to have that same equity.
Got it. So if someone's switching from FHA to maybe get rid of the PMI to a conventional, it would be a full doc loan.
Yes.
Got it.
And there wouldn't be, I mean, it wouldn't be, usually in 6 months, you're not going to refi from an FHA to a conventional because you're
Right.
not really going to be able to yet.
Sure. Yeah,
Right?
that makes
The
sense.
MI is not going to be gone.
Yeah.
You can even refi a conventional loan that you put 20% down on.
Uh-huh.
I'm sorry. I
You
said
can
that wrong.
refi-
You can refi a conventional loan without the 20% equity.
Oh, okay.
And you can actually drop your mortgage insurance.
Oh, interesting. Okay.
Yeah.
Would that be the only reason why someone would do something like that?
Well, I mean, basically, let's just say rates go down, right? You have a conventional loan, rates are way lower, so
Yeah.
but you don't have the 20% equity, so you can't get rid of your mortgage insurance.
Mm-hmm.
So you're going to refi, going to get a lower mortgage insurance, and then a lower interest rate as well.
Okay. Okay. Wow, that's
Nice.
really good to know.
Yeah.
Yeah. Awesome.
Yeah, I mean, even if you have 15% equity, you're going to still have your mortgage insurance is like $60 a month versus $200 a month or
Yeah.
$250.
Right.
you
Right.
know?
And that's a big difference.
Huge.
Yeah. Yeah.
Yeah.
Oh, awesome.
Yeah.
Yeah.
Also, on a conventional
Uh-huh.
loan, you don't actually have to refi to drop the mortgage insurance. So we've had people that were at 2.5%. Obviously, they don't want to refi, right? But they want to get rid of their mortgage insurance. So you just call your servicer, you get an appraisal, and they just, if the appraisal comes in high enough, they will drop your mortgage insurance.
Okay.
Nice.
Just with that.
But when you do it that way, you do have to have 25% equity. They want to see,
25%.
they want to see that 25% when you do it through the servicer without refinancing.
Okay. Yeah. Interesting. Cool. Awesome.
Yeah.
Yeah.
So refinancing is not scary.
Yeah. No, that's really good to know because
Yeah.
people ask about that all the time. So it's good to have like in-depth knowledge.
Yeah,
about
they
what they're
want
saying.
their plan B, I guess. Right
Mhm.
now they're purchasing and they're like, what's my next step? What's my out? It's
Yeah.
basically they want that assurance.
Right.
Yeah.
Because I think the plan doesn't stop with buying the house these days, right?
No,
It's
yeah.
like 12
Yeah.
months from now, maybe 16,
Like a
18 months.
pre-sale.
Yeah.
I know. Well, like
Yeah.
yesterday when that lady said to you, she's like, yeah, but what if I never can? What if I never can?
Yeah,
and you were
she
like, that
was
is not
pretty
going to happen.
skeptical.
Mhm.
Yeah.
Yeah.
Yeah. Okay. That's good. I mean,
Nothing stays the same.
Right.
Rates are not going to stay high. Rates are not going to
Constantly
stay
changing.
low.
Mhm.
Purchase
Real estate.
prices are going to change.
Yeah.
The market, I mean, people are so worried about the market crashing. I don't think the market, well, I know the market's not going to crash like it
No.
did in 08.
Right.
No.
Because loans are different,
Yeah.
right?
Right.
It's just a
The
completely
regulations
different.
are
Yeah.
different.
There's not a lot of
situation.
defaults going on right now.
Mm-hmm.
Yeah.
Everybody that is in a home right now has been qualified.
Correct.
Right,
exactly.
Correct.
Yeah.
Yeah.
And you will have those defaults probably from people losing
Sure.
their jobs
Yeah,
and
totally.
Yeah.
that
Life
type of thing, but
happens.
it's not
Yeah.
going to be that.
Yeah, well, and
Not
everyone
huge.
is sitting on a huge amount of equity and probably some crazy rate under four,
Right.
right?
It's
Yeah.
like, why
That's
would you
majority.
ever, lose that house,
Yeah,
right? You're gonna
yeah.
you'll sell it
You
before
figure it
you.
out.
Yeah.
I mean, that's
Rent it
what's created this crazy environment where we have high rates or fluctuating rates, I'd
Yeah.
like to say,
Yes.
but still low inventory, but still like
Right.
crazy high buyer
And
demand.
the rates are not that high. Honestly, when I first started
Mhm.
doing loans, rates were 6%,
Yeah,
investment 7%, and
Mhm.
people were buying,
Yeah,
right? I
yeah.
mean, they're not that high. They're just high because everyone heard 2.5.
Right. And-
I mean, that's going to be a long time before that happens. So
Right.
I just feel like people shouldn't wait to buy till that happens.
right.
If you don't own a home, you should buy a home,
Yes, if you can
Right?
afford the monthly payment.
as long as you can
Absolutely.
afford the monthly
Yeah.
payment.
Right.
Exactly. Yeah.
Well, I think it's good getting all this knowledge because I don't want to be someone to just push homes on people. We want
Right.
to
No.
we want to set them up
They
for
wanna-
success
they wanna
and
be
Yeah.
confident.
and be fully knowledgeable about the decisions they make. And I've been telling the clients we've been closing on and we've been asked about refi. I was like, trust me, after we close on the home, you'll be hearing from me in 3 months, in
Yes.
6 months.
Yeah.
And we're going to be looking forward to how we can help you,
Yes.
structure it properly. And then,
Yeah.
to
That's a
upgrade
good
Yeah,
the future.
someone said, how will I know to refi? Go, don't worry, we're gonna call you.
yeah.
We have a
I was
list.
like, yeah.
That's
We have a whole
Yeah.
list of people to
Yeah.
call when the refi happens.
I love that question because they said, "Oh, when will we know to call?" I was
When
like,
will
"Don't
we know?"
worry, I'll be calling
Yes.
you."
And only
Yeah.
answer my call.
Yeah,
exactly.
yeah.
Everybody will be calling you. You will know.
Yeah.
I'm
So
your
the-
realtor for life.
That's
Yeah.
right.
Yes.
Yeah,
Exactly.
yeah.
How
That's
do you guys set your clients up?
Um,
Like, how are you getting them right? Because it's you're the first contact, and
Mm-hmm.
then you're like get pre-approved, and then you're assuring them the whole way.
yeah, well, for the pre-approval process, before I used to just kind of give them a list of lenders, but now I'm kind of giving them. I kind of read their situation. I was like, and I want to bring this up later about.
Sure.
I was like, maybe you should have one direct lender option and one broker option, depending on their situation. And I would just give them the number and let the lender take care of it. But now I'm really sitting through the process more. I want to be
Yes.
on the intro lender call, or I'll make the call. I want to be in that lender Zoom. I want to
Yeah.
be every step of the process because I've been through a couple escrows this year where we've just run into a lot of issues. And not that it's anyone's
Sure.
fault in
Yeah.
particular,
It's just
but I
tough
just
right
want
now.
to make sure I'm the most educated I could be
Right.
so I can help coach them through all these things. So if I tell them, hey, you got to refi, well, what does that look like?
Mm-hmm.
How long would that, how much does that cost?
Yeah.
If this is a product, if I tell them, hey, you can afford the monthly payment, just buy now.
Right.
But why buy now?
Right.
Not just, I don't want to be just some pushy sales guy.
Yeah.
I want to be someone
Yeah.
providing value and helping
Exactly.
people and
Yeah.
assisting. So
100%.
I'm just like, we joked about not getting our license, but like, I said, we wish there was a more like deep dive course into like the nitty gritty into what goes into,
Really
lending
goes
product.
into the transaction.
Yeah,
the whole
not
thing.
like I don't want to be a lender, no offense
No.
taken, but
Yeah.
'cause, but I want to know.
Sometimes I
wanna-
don't want to be a lender.
Yeah.
Take that
Yeah.
hat off.
But I want to know more about the process so I can provide excellent value.
Yeah, no, for sure.
Yeah.
And there's so much, like every process is so different. Like there's so much that goes into the process, and every client is so different.
Right.
You know, it's like people will come to you and be like, well, my friend got.
Mhm.
We're like, yeah,
Oh,
but
yeah,
you don't
it's so
know your
different.
friend's entire situation because
Yeah.
I promise you they didn't tell you.
Yeah, or they'll see some promo rate somewhere,
Yeah.
and they'll be like, "We get 5.5 at like this, and this." I was like, "That's like the car dealership saying you get like this car
Yeah.
for like
Yes.
$10,000."
I mean, I get like personally was doing an equity line, and remember my phone. I mean, obviously I had to go
Oh,
through
yeah.
the whole process too,
Mhm.
right? And I'm just like, oh my God, this is what people go through. Like my phone rang, I would say 10 times a day, every single day, because they knew that I was
Yeah,
doing
it's in
something.
process.
You know what I
Yeah,
mean? And they
yeah.
wanted to get me money out of it. I'm like, no, don't worry,
Yeah,
I
yeah.
got this.
Yeah,
But
yeah,
it was just a nightmare.
yeah, definitely. What
So,
about you, Jason?
you
What's
get-
your process?
You know, I think really setting my buyers up as like, you know, we're a team. There's going to be a lot more than myself involved in this transaction. So there's going to be other people looking at your finances as well.
Yeah.
So,
Yeah.
you know, get comfortable with that. But, you know, in the end, we're all rooting for you. You know, we want to get this done in every step of the way. You know, I'm there to explain every process to you. And, you know, if I can't articulate something about your mortgage, then, you know, that's
Right.
when our team members, you know, come in
Yeah.
and
Yeah.
help you navigate that. And, you know, each process is just like, even with the home inspection, you transaction coordinators, you know,
Yeah.
just like
So much involved.
there's a lot of people involved.
There
and,
is.
and setting them up for that, just knowing that they have to get comfortable with that, because it's not always sexy to be talking about finances, right?
Mhm. Yeah,
Especially with
credit.
strangers,
Yeah.
right?
No, for
Yeah.
sure. We've had people say, hey, we're really private. We're like,
Yeah.
okay,
They want to
yeah.
black out their account numbers.
Yeah.
Why do you need this? I don't want you to see what I'm spending. They'll send us bank statements with everything scribbled out.
Yeah.
It's
It's
like,
like,
really,
Yeah.
we don't care. It's
Yeah.
fine that you went
We
to the
don't want to
strip
know.
club.
Like,
Yeah.
Yeah.
We don't care.
we don't want to know that you eat Wendy's every other week.
Oh man, yeah.
You know, that's
Yeah,
not what we're looking at. We
Right.
don't, I mean, we don't have time to do all that. Like,
Right.
we're looking
We
for
look
specific things,
for the
make sure you have
balance.
money. That's the thing,
No
you know?
large
Yeah.
deposits.
I mean, along those lines, there's one line I've been using more where I tell them, hey, the mortgage or loan officer that you're going to be using, said that person doesn't approve or deny your loan. They're
Correct.
setting you up for the underwriter. The underwriter, we don't
Right.
see them.
We're
It's
setting
a
them
third
up.
party.
Yes.
Said this person's on your team. They want you to
Right.
succeed.
Yes.
So stop fighting with them.
We
Like,
tell people, like, don't tell us everything.
yeah.
Yeah,
Don't
no
lie to
secrets.
me.
Yes.
We are not the people
Yeah.
that
Yeah.
you want to lie to
Best
because we will help you fix anything, right?
Right.
But if we don't know and someone else finds out, then it's a big
Right,
problem.
right. So I think phrasing it that way is kind
That's
of
a
put
good
it in
idea.
their mind a little bit better, and I kind of tell them it's like going to the doctor. I was like, it's gonna come out. If it,
Yeah.
I think it's gonna come out. I was like, so
Yeah.
you need to tell them so they
Analogy.
can fix it before it gets worse, if
Right.
anything.
Prevention.
Yeah.
Yeah.
exactly.
And we're all a team. You know, they're like you succeed, we
Right.
succeed. That's
Yes.
the only way. So
100%.
you know.
And people get embarrassed about like maybe certain situations, like credit situations. Like we've had people, that will be a hesitation, right? They call and they say, well, let me just work on my credit a little bit more. I don't want you to run it yet.
Yeah.
You know, I'm not quite ready yet. I'm like, but are you ready to purchase? Yeah, but I feel like I need better credit.
Well,
I'm
let
like,
me tell
okay,
you.
well,
Yeah.
Yeah.
Let me
You
tell
know,
you
Yeah.
that.
let us run it because maybe you don't, and you're gonna go take $5,000 and pay a bunch of stuff off. Maybe you
Yeah.
don't need
Yeah.
to pay it off.
Yeah.
Because you're
We
down.
don't care what you owe. We care what your minimum payments are.
Yeah.
So as long as you're making those payments,
That's a misconception.
you might be fine.
Right.
Yeah.
Right.
You know, yesterday the people that we were pre-qualifying were like, "How do we qualify for this? I just don't understand.
Yeah.
How do we
Yeah,
qualify
Yeah.
for
I'm
this?"
amazed,
Yeah.
'cause you're like,
Yeah.
"That's
Yeah.
so much.
Yeah.
Yeah.
How would we ever afford a house?
But
like
they
that?
made good money. I mean, they were like doctors, and they didn't, and an engineer,
Okay.
and
yeah.
they were like, we don't feel like we want a payment that high. I'm like, well, that's fine, but this is what you qualify for.
Right. Right. You
know?
don't have to use all
Yeah,
of it.
Yeah.
we're not using, and because they were basing their DTI on the outstanding debt, like the whole amount that they had, not the minimum payments that they had.
Got it. Okay.
Yeah,
Which
and
I think is a good thing to clarify.
Yeah, a lot of people think
Yes.
because they have a ton of debt, they're not going to be approved. But if your minimum payments are low,
Yeah.
it doesn't matter.
They
Right.
think it's the balances, and it's in fact
Right.
the monthly payments.
Yeah, I think that's why it's really important to get ahead of that when they're hesitant to be like, oh, I want to work on my credit, but it's like, no, we need to see that now, so that way at least when you're ready, we get you in a better position to win, because a lot of people don't know that credit utilization is a huge impact on their
Yeah.
score or payment history.
Or they
Right,
don't want to
there's-
use their credit at all.
Yeah, and
We're
then
like, no,
which is what,
use
yeah, which is
your
bad
credit.
too. Yeah.
that too, and then even for like the soft pulls, and like, what are you going to leverage your credit for right now if you're trying to buy a house? Like, are you going to buy a car? Are you going to do a
Yeah.
loan? Like, what are you thinking?
Well,
Like,
and the soft pull
Run it,
doesn't
yeah.
necessarily give you the accurate score,
Mhm.
right? And they want something
It's not.
accurate. So it's like, let's just get that accurate report, get that accurate information, and it lasts. It's not, we're not going to keep running your credit every 3 months because you don't find a house. We'll run
Right.
it if it's been 6 months, we'll run it again prior to that, but we're not just going to keep running it.
Yeah.
Sure.
Yeah.
Right. That
You
makes
know.
sense. I heard somewhere that so if it was a consumer and they went to multiple loan officers to get like a quote or
Shop
whatnot,
around.
yeah, and they're pulling their credit, does that affect their score?
No, there's actually a time frame that the credit bureaus give them to
Mhm.
shop their rate.
Okay.
And it's like 14 to 21 days. Or
I mean, there's a
different-
conception on
yeah,
that. I
there's
think that
different
if
things.
I've heard-
you
'cause I've
run
heard
it,
different things,
if
yeah.
you're running it in that same week,
Yeah,
I would
it's-
say
there's a
the
time
score
frame.
really doesn't change.
Yeah.
But it is inquiries,
Yeah.
right? So what
Yeah.
ends up happening eventually, if you continue to do that, I think that if you did that for 30 days,
Yeah,
your
you can't
score's
do that
gonna
for
drop.
30 days.
Got
and
it.
if you
Small
have
window.
if you have like a 760 credit score and you go have your credit ran 3 times, your score is probably not going to drop.
Yeah.
If you have a 560 and you go
Yeah.
have it ran 3 times, it's probably going to drop.
God, it's more
It's probably going to
sensitive.
drop the second
It
time
is,
that you
yeah.
ran.
Yeah.
Yeah.
Oh, interesting. Okay,
Yeah.
so that's good to know.
Yeah.
So maybe ask about that. but-
Yeah.
Yeah.
So we'll kind of ask them. I mean, people that get like freaked out about their 800
Yeah.
score,
Mhm.
we're like, you're fine.
Yeah.
I mean, if you have an 800 credit
People
score, let
with
us
the
run it.
highest-
It's
Yeah.
going to be okay.
Yeah,
The
yeah,
people
yeah.
with the higher scores are the ones that are more cautious. Like,
Yeah.
oh my
They
gosh.
are.
We run
But
into
the
that
people
a
with
lot.
The lower scores, I'm like,
Yeah.
yeah, go ahead.
Yeah. Yeah.
It's
Yeah,
fine.
Yeah.
we run into
And
that
I
a
mean,
lot.
anything really over, if you're over 760, you're
fine.
getting
You're
the best
golden.
rate.
Right.
You know what I mean? So,
So whether you're 800 or 780, you'll be fine.
yes.
Yeah. And not that it's going to even drop that much.
Exactly.
Right. Got
Yeah.
it. Okay.
100%.
Well, I did want to ask you guys a little bit because there are direct lenders and brokers. You guys are brokers.
Yes.
So what does brokers kind of bring to the table?
We
in
bring
terms
the
of-
table.
Nice.
Yeah, in terms of options and what are some consumer
Yeah.
benefits?
Basically,
of
the
it?
whole
Yeah.
spread, right? The whole
Okay.
spread.
Yeah.
I
Well,
mean,
yeah, I mean, there's so many options, right? So as a broker, we have several banks that we can shop.
Mm-hmm.
So we're not just stuck to one, as a direct lender, you have one rate,
Mhm.
and we have like 14 different banks
Yeah.
to pull.
we have a bank for the high balance, a bank for FHA,
Yes.
right? If you work at a direct lender, your company might be good at one thing, right? And they have
Right.
killer rates at that one thing. Well, we have all the banks that have the good FHA rates, have the
Mhm.
good VA rates, have the
Right,
bank
the
for the high
jumbos,
balance,
yeah.
have the jumbo. Like we have
Or
a
even
whole
the bad credit scores. We're like, you're going
Yeah.
there.
Okay.
yeah,
okay.
we have a whole bank where we
Yeah.
send they actually
Yeah.
give good rates to people with bad
Right.
credit.
Oh,
And they don't
interesting.
even have good conventional rates. They just specialize in that.
Interesting.
Yeah.
Interesting.
Right?
Yeah.
So I mean, we have like the ARM products, the interest only, the investment, the DSCR.
Mhm.
And then the appraisals, also another thing, different with brokers also.
Okay.
We
What-
have our own panel, etc. If something doesn't work out, like
Mhm.
the appraisal has a problem, it
Yeah.
comes lower than the value we need, we can just switch it to a different bank.
Oh, interesting.
Yeah.
And-
Yeah.
And
so
see,
that's
so that's the
different.
thing. So some
Mhm.
some direct lenders do have their panels. However, they don't have the ability, like
Right.
on a conventional appraiser, if that appraisal comes in low,
Mhm.
That's it.
just
That's the
it's done.
appraisal.
They can't just reorder a new appraisal and resubmit it. Well,
Right.
we can do that.
Yeah.
Right.
Oh,
Interesting.
nice.
Yeah, we
That's-
take it from
I
here,
mean, we've
bring it over here.
submitted a loan to 3 different banks before.
Yeah.
Oh wow, really?
Yeah.
Wow. Okay.
Yeah.
Okay.
We'll see what
Till we
one
get what we
comes,
want.
Yeah.
Well, I didn't know that about the appraisal. They
Yeah.
keep
Yeah.
reordering.
So the only thing that you can't do that on, obviously, is FHA and VA because
Right.
it's
that
everything
is what it
attached
is.
to
Right.
Yeah.
So those ones you got to dispute or
Mhm.
fight. but
Okay.
that-
Okay.
But I mean, they tell you on a VA appraisal if it's going to come in low, so then you have your chance to.
fix it. Yeah.
Fix
or,
it.
or work it
Yeah.
out. Or,
But I mean, brokers. The misconception too is people think that brokers have higher fees,
Mm-hmm.
and
Oh,
we
yeah.
absolutely
That's so
don't.
not true.
We could have no lender fee if we wanted to,
Are you-
right?
are
I
you
mean, we
guys in
could
like an-
waive the full lender fee. Like our lender fee is $15.95 flat,
Uh-huh.
but I mean, we can do no lender fee,
Oh.
right? We could credit the whole thing if we wanted to.
You
I
really
feel like,
wanted
really
to.
aggressive.
yeah, we have more control. You know what I mean?
Yeah.
So the rates are lower.
Yeah,
We've
there's no
both
levels
worked.
of management either.
No,
Yeah.
yeah. So there's
Nice.
we can go directly to the owner if we have an issue.
Got it. Okay.
Right.
Wow, that's really good to
Yeah.
know. Yeah.
Very
yeah.
good.
Very cool.
That's a good misconception about the rates.
Yeah.
Yeah. Well,
that I think
people
a lot of
say that
people have.
brokers don't have control. I feel like
Yeah.
since and I mean, you know too, right?
'cause
You
we
were a
both
direct
worked at a
lender.
direct lender.
Mhm.
I worked at a direct lender, a builder, a bank, all the places,
Mhm.
and I have.
So you've been, yeah, you've done it
I
all.
would never. So I can actually say I
Yeah.
would never
Yeah.
ever do anything other outside the broker world ever again.
Got it.
Ever again. I mean, it is just night and day. Like, I wouldn't even ever use a bank
Right.
to do
Okay.
my own personal stuff. I mean, I would do everything through a broker.
Right. Interesting. And how long have you guys been in the business?
I've been in business like about 10 years.
10 years?
Yeah.
22.
22. Nice.
22. I know, a long
Yeah,
time.
yeah,
I'm
yeah.
aging myself.
Interesting.
Yeah.
Yeah. You have any other questions, Jason?
No, I don't think so.
Yeah. Well, that was really informative. Yeah. I think
Awesome.
we got a lot of misconceptions out of the way. Yeah.
always a good
absolutely.
That's
thing.
good.
Yeah.
Yeah.
We learned
Get
something.
the truth out there.
Yeah.
Yeah.
Yeah. So I'm sure people may have some questions for you. What's the best way for them to reach you guys?
Oh my gosh.
I would say, what do we?
phone, you could text us, call
I'd say
us,
text.
and Instagram.
Okay. Yeah.
Yeah. What's your Instagram?
So yeah, my Instagram is Miss_mortgage lender.
Okay. And we'll put it down on the
Yeah,
down
yeah.
below too. Yeah.
And mine is at Loan Pro Julie.
Loan Pro
All
Julie.
right.
Okay.
Yeah.
Excellent.
Yeah,
All right.
We'd love to connect.
Yeah, definitely.
you.
Yeah. Well, do you guys have any other questions or anything else to share?
No,
I think we're good.
just call us.
Yeah.
Yeah.
perfect.
We always want a phone call.
Yeah, and I've sent clients to you over the weekends, and you guys are really
Yeah.
good. I love how
Yeah.
you guys work as a team, so there's always
Yeah,
someone
there's
there to
always
You
someone.
guys are a team.
Yeah,
Yeah,
definitely.
love it.
So two is always better than one.
It is. 100%.
Absolutely.
Yeah,
Yeah.
excellent. Well, I want to thank you guys so much for coming. This was a really great
Thank
and informative
you.
conversation.
Thank you,
So-
Thank you for having us.
Yeah, and hopefully
It was
let's
fun.
do it again soon.
Yeah.
Okay. All right. Thanks, guys.
Thank you.
Nice.